So at this point I have two major stock positions, and these are Nvidia and Tesla. So the first one is an AI infrastructure play. The second one is an AI application play. Tesla is an AI application. Tesla currently creates the biggest AI applications in the world. And in this video we are going to look at training versus inference demand worldwide, and we will try to find out whether the AI market as a overall is currently overheated, or if there is in fact a lot of utility. Because in a way you can think of training as building the infrastructure or an infrastructure play, and inference as the real utility, the real money you can back. So training is investing dollars, inference is getting back dollars from the marketplace, from the actual users of the applications. Okay, so now why should you listen to this video? First of all, AI training is basically spending for the hype. So if you train your foundational model, so say the crude model or the autonomy self-driving car models, kind of that are, for instance, trained and provided by Nvidia as well. If you train those models, these are like infrastructure bets, right? Because you actually bet on future use of this model, and you spend a lot of money and a lot of effort training the model, preparing the model, and you hope that it will get used a lot, right? And for instance, usage now of those kind of models would be, in the case of the AI autonomous driving model, would be you have hundreds of millions of autonomous vehicles that actually perform an inference operation on your model at runtime, at real time. And in the instance of the crude example, so crude is the foundational model for humanoid robots that is shared across many humanoid startups that collaborate with Nvidia. If all of them use the crude foundational models at runtime, right? So humanoid robots, say we have billions of humanoid robots on Earth. Now they actually perform an inference operation on the crude foundational model at runtime, and they perform many of such operations to solve all kinds of problems on a daily basis. So training is like reading a book, and inference is like using the knowledge you gained from the book in the real world to create real value. So inference is the value, is the real world value, tangible value that is created, the economic value that is created. Training is not so much. Like, training is important, reading is important, but if you just read and do nothing with it, then it's like useless, right? So let's go back to the why real quick. If you have so the training foundational layer is basically an infrastructure expense with expectation of future profit. So you expect future profits, but you don't know yet. You expect a return on investment on your training infrastructure. And we have seen in the past many infrastructure hype cycles. For instance, when building the infrastructure of the internet with Cisco and similar companies, many of those infrastructure hype cycles ended badly. So providing the infrastructure for the internet is similar to providing the infrastructure for AI, to basically provision to bet on future usage of the infrastructure in the internet. And of course we need the infrastructure as well, right, to actually create the applications. But the question is just, can you as a company make some money doing it? So we have seen in the early days of the internet that the infrastructure hype cycles are really dangerous, often end up with overhyped companies. And for sure we are seeing like initial signs of this with Nvidia stock as well. Contrarily, AI inference is basically spending for usage. So users give you money basically, or you extract some value from the usage of your foundational models. So you have real world utility of AI applications. There are actually the users. You have the either human beings or other machines running inference operations on your hardware or on another person's hardware, and actually paying for this would mean that you pay for an economic utility. of a third party. And now this third party might give you money, attention, or anything else, maybe data, but you at least get something out of it. There's at least real world utility. So this is inference, is basically how AI training spend is ultimately recovered. And if you don't have AI inference, you will get a zero return on investment of your AI training cost. Okay, so the first example we've already seen, the crude and autonomy models. The second example would be ChatGPT. We have all seen it. Usually the pattern looks like this. This is like more an exemplary pattern. You see in red the model training cost. Initially, model training is really high. Like say you as a startup, maybe you pay 1.7 million. And then later on, after usage explodes, basically your production AI for inference, your inference cost basically explode, because here you need to rent AI inference hardware in the cloud, so you compete with other people using AI training and inference, and the cost can quickly gobble up, which is basically a good thing, right? Because now this means your AI is at least used and the usage keeps increasing. And oftentimes we would expect that the inference cost would outstrip the training costs in many cases. At least for a very, very successful applications, this would be the case. So if we serve daily hundreds of millions of users, and each of them may be issuing 10 prompts, we might serve a billion prompts a day, right? So for a very successful AI applications. And then, of course, these billion prompts a day, we can basically spread the initial infrastructure cost for AI training among those billions of daily usage, right? And so per usage, basically, it becomes the training becomes more cheaper and cheaper and cheaper the more we use it per usage. But of course, we would have to pay for inference, and if the utility I get from using the model is lower than the inference cost, then somebody loses money in this marketplace, right? But many instances, I would say we actually get more value than we pay, because ChatGPT can really help us figure out things, maybe even heal some or solve some health issues, right, that are worth maybe 100K or so for us. So we really get the economic value, for instance, provided by our health advisor that runs on ChatGPT. So we really get the economic value, and we gladly pay like $20 per month or so for inference. Okay, but let's look at Google Trends. Google Trends basically suggests, the latest Google Trends I found is if you look for best AI inference and you compare it with best AI training. So the only thing we changed here is one word, inference versus training. And I used best AI as a prefix because this would be the search term somebody, a decision maker would use to maybe find the best hardware provider or so for inference hardware versus training hardware. And usually if you are, say, the CTO of a company and you are making and you have a very successful company that gets a lot of usage, then your inference cost would go through the roof, and you would basically search for best AI inference hardware or something like this, right? And on the other hand, if you are a CTO, you're just starting out with your AI app or so, you would search for the best AI training, something like software, GPU, hardware, cloud provider, and so on. So you would search for best AI training. And so currently we are still seeing the infrastructure built out. So we have almost 10 times the search queries for best AI training versus best AI inference. So people are currently tend to be more on the hype side of things, right? So this would indicate that we might be a bit overhyped, but there's more to the story, as you will see in a moment. Then the second Google Trends search query comparison I made is Nvidia AI Inference versus Nvidia AI Training. And here you can actually see that we are coming from a more hyped situation where we have much more training search queries than inference search queries. So we have more hype and less usage actually, but we are currently seeing these two converging, right? So they converge to each other, and we might easily see a crossover point where the blue line, the Nvidia AI inference line basically crosses the red line and becomes more sought after on Google at least. And yeah, currently we see like these are some healthy signals in the marketplace, right? So AI training calms a bit down, AI inference is actually going up, which means utility of AI applications starts to rise. And this is exactly what we would expect with such a young and fresh market. First, we build out everything, like in the internet, and then we get the killer applications like Google, Facebook, Instagram, YouTube, and Uber, Airbnb, all these applications that actually create utility in the real world. So in an article I found, it gave this snippet. This was really interesting. I will read it to you. Sam Altman recently claimed that OpenAI currently generates around 100 billion tokens per day, or about 36 trillion tokens per year. Given that modern language models are trained on the order of 10 trillion tokens, and tokens seen during training are around 3 times more expensive, so we have 3 times 10 trillion, 30 trillion, compared to tokens seen or generated during inference, a naive analysis suggests that OpenAI's annual inference costs are on the same order as their annual model training costs. Very interesting, isn't it? So why are they? So the OpenAI training and inference costs are roughly 50-50. Now let's look at the reasons for this. The reason is that there is a trade-off between training and inference, and this trade-off, like this is more scientific outcome. We can read it here. For example, varying scaling policy means we overtrain models by making their training data sets bigger relative to the compute optimal dataset scaling rule given by Hoffman et al. This gives us some room to reduce the model size without affecting model quality. So we reduce the model size by say throwing more data at it. We reduce the model size without affecting the model quality. But we need to pay for this with increased training overhead, right? But then after we increase the training overhead, so we have more compute in the training phase, we have a smaller model at the same quality. So as the model is smaller, now inference becomes cheaper as well. So making inference with the model cheaper as the computational cost of processing a token at short context length is proportional to the model size. So this means we can, if we want, so if we, for instance, have an application where we have 90% inference and 10% training, so in terms of our compute cost, we can basically increase the training phase, the training complexity, to reduce the model size, to make the inference faster, and maintaining the same quality. So we can converge back to say the 50-50 in terms of compute performance. Or as a rule of thumb here says, we expect that each technique makes it possible to save around 1 order of magnitude of compute in either training or inference in exchange for increasing the other factor by somewhat more than 1 order of magnitude. So we can for instance 10x the inference compute, and we reduce training. We can 10x inference compute, and we reduce training overhead by 10x as well, right? So we have a 10x, we multiply 1 by 10x, and we multiply 1 by 1/10, or divide 1 by 10. So, and the other way around, right? So we can also, if you want to really fast inference, we can, for instance, throw 100 times the training at it, and the inference overhead then becomes 1/100th of the original inference overhead. So we basically speed up inference by significantly increasing the training overhead. And this is like not one-to-one, it's very rough math, but it is a good intuition you can get that there is a trade-off that we can play around with. And yeah, actually this is the reason. So the key insight here is to see why this implies we should expect, so they expect investment parity. So they expect that there is economic pressure between what we invest in AI training and what we invest in AI inference in terms of the compute tokens we spend on either. And why do they expect investment parity? They they gave this example. Suppose that a lab was spending 1 zettaflop of compute on training and 100 zettaflop on inference. Okay, so they spent 100 times on inference what they spent on training. Then they could make use of the training. So in total, they spent like 101 zettaflops, right? Now what they can do is they can use of the training inference compute trade-off by increasing their training compute by a factor of 10. So instead of spending 1 zettaflop, they can now spend 10 zettaflops. And by doing this, they would reduce their inference compute by a factor of 10. So they would reduce it from 100 to only 10 zettaflops. So by having like a 10 zettaflop compute on training now, they spend a little bit more time on training. They can spend significantly less compute time on inference. So 10 plus 10 basically means that in total they spend 20 zettaflops. You see, that's why like these factors, you would trade them against each other until you reach parity, because parity is the point of minimal cost, basically. As long as there is significant difference between those two proportions, like here, like the 99:1 difference, as long as there is significant difference, you can basically increase the one and increase the smaller and reduce the larger to reduce the overall overhead, right? So you see the overall overhead was now reduced from 101 zettaflops to 20 zettaflops, but simply 10x the training compute. And this basic math, of course, it is only like rough orders of magnitude math, because it might be a 30-70 trade-off or something that is like the convergence point, but it's like orders of magnitude investment parity, right? We probably won't see something like a 10x difference between training and inference. And this is very interesting because there was a recent All-In podcast interview where Chamath actually said that we will see 100 times inference versus training. And I don't think this is the case because of this trade-off. I think it's plainly wrong, or I mean, he should have to argue against this first principles argument, and I think it's a very difficult position to be in because this argument is so strong, right? And the only like external market pressure I see that favors training over inference, basically, like this is the other way around, right? It doesn't even favor inference compute. It favors training compute, is that for real world applications, we need fast applications, we need speed. And in order to get speed, we need to spend more on training relative to inference, right? So say you have like one startup spending 50-50 on either, and now the other startup decides to spend more on training to obtain a smaller model with the same performance capabilities. Now they have the smaller model and they can accelerate their inference operations. So they are now, for the user, it feels more responsive to use the second company's model. So therefore, there will be more usage of the second company's model. This company will get more data, will get more users, will get more economic, a larger economic pie, and they can spend more on training and so on. So it's a virtuous cycle, and actually the companies outspending their competitors on training probably have the best, smallest, fastest, highest quality models, and they will get all the business. It is a winner takes most market, and the winner who spends most on training versus inference is likely to win. And this is like very interesting, right? Because now we would see investment parity if it was just a matter of where do I spend my money. If I want to spend less money on AI, on compute, then I would have some kind of parity, some stable proportions, 50-50 proportions, 60-40 proportions, something like this, right? But now if it goes for, if we add the competitive pressures, then we would basically spend even more on training. So the balance would shift more in the direction of training compute versus inference compute. And with Chamath's argument that inference will be 100x, I think this will be completely invalidated now. In reality, most of the compute will be training, and it must be for these economic reasons I outlined here. And in fact, in the Nvidia latest quarterly report, you find this statement if you dig deep. Data center revenue for the first quarter of fiscal year 25 was 22.6 billion, up 427% from a year ago, and up 23% from the previous quarter. In our trailing 4 quarters, we estimate that inference drove about 40% of our data center revenue. Data center revenue is basically the AI training revenue. And from this AI infrastructure revenue. And from the AI infrastructure revenue, the data center revenue, 40% is for inference, 60% for training then, right? And now they invade new platform and so on. And so we see that there is parity indeed. I mean, these kind of considerations, they were like more first principles thinking. This one I provided you. It's more first principle argument, right? But now, if you look into the real numbers for Nvidia, you see that there is parity. There indeed is like, it's almost a 50-50 split, right? With more bias toward training overhead versus inference overhead. So we already have reached this parity state with bias toward AI training. And it will probably be a stable state, and it will probably stay the same. So in this way, I don't really get why so many people are worried about Nvidia's weakness in AI inference, and this is in quotation mark, because I think I don't think at all Nvidia is weak in AI inference. The best AI inference hardware that was sold like in 23 and also beginning of 24 is the H100 or H200 GPUs, and they are used for training and inference, and they are strong in both. They can be integrated nicely with data centers, with CPUs. They are very energy efficient. They have great network connections and so on. So given these insights, I think it tells a very optimistic story about an investment like Nvidia. And this is not investment advice, but this is just like how I see it, because Nvidia already understands these trade-offs very well. I mean, they have created the market. They understand these trade-offs. And that's why Nvidia doesn't rush without considerations into the AI inference market. They understand AI inference is important. They also provide the products. But unlike Chamath, who often like speaks his own book, he's invested in a large AI inference company and he wants to sell the shares eventually, in my opinion. Unlike what he's arguing, chances are we won't see a 100x difference. We will see a 50-50 parity because of these first principles arguments and the trade-off between training and inference. We will see a parity, and with a slight bias for training due to the competitive pressures of wanting to be the fastest AI inference application. So for instance, in the self-driving car, we need speed more than anything else. And we need speed of inference, latency. We need to spend more time training, not less. Because if you want very quick inference, we need to spend even more time training to make this trade-off a reality. So this is really, really interesting stuff. This goes against what many participants in the market think, and I think this is some real alpha. I hope you appreciate this. And yeah, if you like these kind of videos where I give you my opinion on different tech topics and AI topics, then give me a like, at least subscribe to the channel. It's free for you, but it helps support our work. It gives me like the motivation to go on a daily basis to help you be on the right side of change. I appreciate having you here. I appreciate your attention. Thanks for watching this video. If you want to learn more, if you want to become an AI engineer, then you might also want to consider checking out our Finxter Academy. So go to academy.finxter.com, browse the course libraries. We have all courses on Hugging Face and all courses on local large language models using locally on your machines. We have courses on using Google's AI APIs and so on. So we basically have everything you need to become a highly trained AI weapon that can be deployed by all kinds of new companies, by all startups. So basically to help you become a sought after member of the modern economy. Thanks for watching and see you in the next video. Bye.